We don't go that far. We don't go that long.
We aren't going to 10:50.
You obviously have another meeting today because you're all dolled up. Not you, Ben.
No, I brushed my hair for you guys.
Oh, that's so.
I brushed my hair too. I'm not wearing a hat today.
No hat? Yeah, it's not Friday.
This would be a good day for the Make Volatility Great Again hat.
Ben and I, yeah, Ben, we got, do we have 3 down days in a row? Like, what is going on? People must be losing their freaking minds.
That's what they said to Tion this morning. They said, what's going on? This is so weird. Credit spreads are up and stocks are down. What's going on? We're making money. This is ridiculous.
What is going on? This is very, very unusual. All right, let's go retweeting all that fun stuff. We'll give a few minutes to get everybody following along. And then we'll get this show on the road. I don't know if I've ever hosted with Berna.
Yeah, we haven't been on together in a long, long time.
This will be a treat.
Yeah.
And she's going to talk about a stock I own, I think. So that's even a double treat. All right.
There, I was retweeting. Which one do you own? The little one or the big one?
I own the little one.
Okay.
I was warned away from the other one. It was no touch.
By healthcare person?
By Maris, yeah.
Oh, I think he owns a little bit now. I could be wrong, but I think he.
Yeah, he might now.
He's warming up to it, you know.
Yeah, he's warming up to it because it's so beat up.
Yeah, I mean, I've been no touch until now as well.
Recently, yeah.
Yeah.
It's
when you're down 50% on the year, that's when
that's when you start to.
For a company that's not going away.
Yeah, with every other stock like super overbought, it's kind of hard to find those little diamonds in the rough, isn't it? All right, there. One more. There. All right. You guys ready to get going? All right, good morning, everybody. Welcome to Wall Street Beats. I'm Steve Lamar, and I am joined by Berna Barshay and Ben Brey. And this morning we were just talking about stocks being down for a third time in a row, which hasn't happened in quite a while.
Strange times.
Ben, what was that? I saw the Fed signaling limited room for further cuts. What was that all about?
I mean, look, they don't want to get too ahead of their skis.
They want to get too far ahead. Yep, exactly.
Yeah, they want to keep it like orderly, basically. I think like if they cut too fast, they lose all their bullets, and then all the curve's gone, and then it's terrible for the banks. So I think they want to do steady 25 basis point cuts as opposed to like getting sucked into 75 But the thing is, and I think I talked about this last week, but long the dollar has a little legs for the first time in a while, trying to break out here this morning.
Yeah, well, the market down 3 days in a row. You'd think the dollar would be breaking out a little bit. All right, so we're gonna talk some Weight Watchers. We're gonna talk, I think, some Novo Nordisk, and I see Costco's gonna announce after the close today. Berna, I don't know if you're involved in that at all. I know Jeff and maybe Ben, and I know Nadine is. Did you guys see CarMax this morning? Just getting shellacked. Investors weren't happy with those. It didn't look good. It didn't look good. The stock is reacting.
Yeah, it's rough.
And
then, rough over there.
I also hear the White House. I see the White House is signaling get ready for a shutdown. So anyway, we got some fireworks coming up here the next couple of days. So let's get started. I know Berna wants to talk some Weight Watchers and Novo, so let's get on with that in any order you desire.
Sure.
I'm excited. I own Weight Watchers, so I'm excited to hear about this.
Yeah. Well, I mean, Ben found this one, and we both talked about it on the show before, but I thought I presented it last week at a conference, so I thought that this would be, I thought I'd share some of the slides from that presentation since I have them put together and also give an update. I don't know that either of us have talked about it since they reported a quarter, gave some updated guidance, and made some other corporate announcements. So, Jen, maybe if you could throw up the slides, I'll just like talk through the slides. So just a reminder what happened here. This company went through bankruptcy. Business had been pretty shellacked. This is a 60-year-old dieting, brand, really the best diet company out there. But, GLPs are just better than any diet. They were also very disrupted by COVID because of their in-person model of meetings, really had to make a quicker transition into digital. So it went through bankruptcy, shed over $1 billion of debt. You've got a very small cap undercovered stock now, just over 300 million. And I'm assuming 10% dilution on the existing share count. So, on the outstanding shares, probably a bit under 300 million now, but you put it all together and you've got a stock that's trading at just over 4 times EBITDA, basically telling you nothing good is going to happen here. But the leverage is down to just over 2 times, and the company's generating cash. So sort of in the worst case scenario, I think they've got 5 years to make something happen here with the balance sheet they've got. So, Jen, if you could switch to the next slide.
So Berna, how much of the debt was converted to equity? Because this has kind of been a thing Ben and I have been talking a lot about over the past few months that we've owned this, and the debt seems to just be sitting on the bid. I mean, sitting on the bid, sitting on the ask, however you want to say it. And just until that, these debt guys don't, they don't care.
91%.
Liquidity, they want to get out. They're not stock traders.
91% of the equity ended up with the former debt holders who aren't in the business of holding equity. So, I don't, people say markets are efficient. Markets are not efficient on a post-bankruptcy equity because you've got 4 sellers holding it, and maybe they don't want to sell it 5 minutes after it comes out of bankruptcy, but they also don't want to be holding it a year after it comes out of bankruptcy. So I would expect any good news to be met with some selling, but I'm not playing this for this isn't a trade. This is when the stock goes up or down 10%, there's no information in that, right now. And so you have to understand what you're owning. You're owning a undercovered small to micro cap that has limited sell side coverage, trades by appointment, and is really like almost a pseudo private equity vehicle at this point. I didn't give the slides to Jen to put up on this, but like in my presentation that I gave last week at this investor conference, I threw up the slides of a couple of other post-bankruptcy companies that I've owned that were, I'm not saying that this is going to be Weight Watchers, but like Weatherford, which, both Robert and I have talked about on the show before, was, a 5X from where I bought it, a 5-6X, but it also like went sideways for about a year before it started going. And I have a bunch of other examples of stuff like that. So it's sort of hard to say like when that ownership transition is going to happen in the date and the shareholder base, but so by definition, you're almost always early in these situations, but I'm okay with that because of what I think is, asymmetrical upside. So
no, and it might create some opportunities to get some stock on sale.
Exactly. So I would tell people not to panic too much if, on any kind of movement because it's not really telling you anything. Like if GM or Microsoft move a lot, it's telling you something because those world's pretty efficient about those stocks. They're not efficient about this one. So
anyway, let's get back to your slides. Let's get back to the slides. Sorry.
So basically what you have here is you have a growing business, a high growing business, which is their telehealth, GLP distribution and coaching business that grew 55% in the last quarter, which is now about 17% of the business, contrasted against the legacy business, which is like weight loss apps and the traditional meeting business, and that's about 83% of the business right now. So you have one business that's growing 55%, you have another business that's down 10-12%. It's in runoff, but still very high margin and kicking off cash because it doesn't have a lot of incremental expenses. It's pretty much a fixed cost business, so the for a while it can remain profitable. But sometime probably late next year, you'll shift to the point where the small growing business is growing fast enough and gets large enough that it offsets the decline in the legacy business. At that point, this stops being a top line negative company and a top line positive company. And I think that's when that becomes clear, you're going to get a re-rating. Now,
and the market in that growth business is big enough for another player
tremendous.
like this.
We've got 1% of the population on these drugs when 50% of the population needs it. And next slide, please, Jenny. I think part of the reason is that Barshay, let me come back to that because I just want to put that valuation in context, and then I'll jump forward and answer your question about the opportunity. I wish Maris was here because he'd be mad at me for putting this up, I'm sure. But I just wanted to contrast with Hims because it just goes to show how little credit they're being given for a 50% growing telehealth business. So Hims has a very similarly sized GLP-1 business, one that's completely dependent on compounded medicine right now, which could entirely go away. Now, obviously, the rest of Hims is selling like ED pills and hair loss supplements and other stuff. So they've got a big business in other things. But, this very, very fast growing company, 70% revenue growth, is trading at 34 times EBITDA. And it's got an 11 billion market cap for really only twice the EBITDA that Weight Watchers has now. Most of that EBITDA being associated with the legacy business, which is of course in decline. But look at that legacy business with its 20% plus operating margin versus 6% over at him. So I just wanted to give that context because me saying 4.6 times could go to 7.5 times, that seems like an aggressive multiple expansion suggestion. But when you look at others, I had to pick on him,
but it's really not.
And people are so excited about the GLP business at Hims. Well, it's 200 million versus 125 million. Yes, it's 2/3 bigger, but it's also in the same realm of business size. These are comparable businesses if you were looking at it from a VC PE perspective. So next slide, Jen. So in terms of the opportunity, this is an end market that is expected to quadruple. What people need a lot of help with is figuring out how to get these drugs paid for, because like the list price on them is $1,300. Insurance doesn't really cover them. I would say that Weight Watchers is providing two services. One is the same service that like Hims and Row and Calibrate and all these competitors are doing, which is helping navigate how to pay for them. So working your insurance and helping you with the appeals to maybe get them covered by insurance. And if not, navigating the coupon systems that, through Lilly, you can get Zepbound for $5.50 in the pen, less if you do the vials. I think it's $3.99 now for Novo and Wegovy, and sort of working through what is a complicated system. I'd say the other half of this is that these drugs aren't the magic pills that people think that they are. Results vary, and they vary to a certain extent with how well you run your diet. Are you eating enough? Are you eating too little? Are you eating enough protein? Are you having muscle loss because you're not eating the right protein? So I thought this was an interesting slide out of the Weight Watchers deck that shows that they are having higher weight loss results than these competitors, because they're giving tools around what to eat, how to eat, that are easy to follow with an app that go, as a complement to the drug.
Because that's where they came from, right? They came from
not just like side. Here's the drug, go away, and like all these other companies don't have the infrastructure to necessarily offer that, so they have a head start there. So next slide, Jen. So yeah, this is just the slide on why people need the support and why Weight Watchers is uniquely positioned to offer that support. Um, and anyone who's been to a doctor in the U.S. knows that your doctor's not going to hold your hand and tell you what you should be eating for lunch and dinner. That's just not how healthcare works anymore in the U.S. Next
So Berna,
slide.
how are they doing it in terms of like for calibrating it for each individual patient? I've read a lot about kind of one size fits all shots isn't really good for everybody. People should be dosing based on their weight and based on their age and based on their activity, and then they should be adding other things to those dosages to offset the muscle loss.
Well, I
that
mean,
you
I
can
think
have,
that
et cetera.
they're using the points program, which is their traditional diet. If you're on a
Mm-hmm.
GLP, you're getting a points program that's going to push you towards like proteins and making sure that you hit your protein numbers. As for the dosing, they have clinical professionals, doctors and nurse practitioners that are like the other telehealth companies working with patients to properly dose them and titrate them up and all that stuff. I wanted to
So
just mention
they've got the same setup with the doc. Each person
same.
gets kind of an individual consultation.
Yeah, I would say where they differ. I mean, every telehealth company is going to be taking into account, your starting weight, your activity level, your age, all those things. But I think the difference here is the ability to integrate it with a diet and an app that has 60 years of continuous improvement into
Right.
it, and
Okay.
a slew of scientists on staff. They do studies and stuff to every time they change up the diet. They do double blind studies and
Yep.
in a true scientific method. So the other thing I wanted to mention, which I think is a call option, it's not a business yet, but it's a nascent business, is that they're using this sort of clinical infrastructure that they have put in place for telehealth to go after the menopause market, which is probably one of the largest markets that is least treated of any medical condition, out there. About 30% of the world's population is target market for this stuff. And you see a ton of activity in PE and VC world around this, because it just sort of bubbled up sort of in the zeitgeist as something that needs to be treated and has been ignored, and doctors aren't really trained to do in medical school. So there's been a lot of private sector stuff bouncing up. So here's just to say it's a large TAM market that has very high overlap with their 3 million existing customers and their 10 million former customers that they have in their database. So the people that they know where they are and the people who need this is very high overlap, and they've built out this infrastructure. So who knows if it goes anywhere, but I would say it's just a second really large TAM thing that they're going after with their existing infrastructure. Jen, next slide.
Is this treated with medicine, or how do they have
Medicine. I
drugs
mean,
for
it
this?
can be like diet and behavioral modification, which is what is in their traditional legacy programs of the apps and the meetings. But there's also drugs that are HRT basically that is being prescribed, and some other stuff that they give people, things for
They
their
could.
skin.
They should start selling those. They should start selling those headphone-looking fans. Have you seen those? You wear them around your neck, and
Oh yeah, yeah, yeah.
they look like headphones, but they're actually
Right.
fans
I
that are
had them.
blowing
I
air
had
up
to
in
go
your
to
face.
Orlando in August. I bought them for
You've seen those?
all my
Yeah.
friends and family for Orlando in August, which is kind of like the
I've
ninth circuit call of
I'd never
doctors'
seen
health.
those before, and I saw them on somebody. I thought they were cool looking headphones. I'm like, what is that?
They're
Oh, that's a
good. They're
fan. I'm
good.
like, okay. Anyway,
So
sorry.
anyway, they announced this earlier this month, and they signed up Queen Latifah as their spokeswoman for this. And in the pre-GLP days, Weight Watchers' ups and downs were very tied to these campaigns around celebrities, and I would argue that it's still important for the business to pick the right spokespersons, because you're dealing with something that's like emotional and personal, and I think they made a good choice here. So anyway, I'm something to watch, not something that's going to move the needle in 25 or 26, but it's if I think if the GLP business starts working, then people are going to start thinking creatively about what the possibilities for this business will be.
So they traded Oprah for Queen Latifah? Is that what they did?
I was gonna say, this is like the JV Oprah, right?
The what? The JV Oprah? Yeah.
The JV Oprah.
Queen Latifah against Serena. Isn't Serena celebrity?
Well, yeah, I'm getting there. I'm
Roe?
getting there.
Yeah. Okay.
Yeah. So
Right.
I think this may be in the next slide. I can't remember. Jen, can you go to the next slide? Yeah, here we go.
Oh,
Here's
yeah.
Serena. So Roe, which is one of the telehealth competitors, like I was just thinking about this last night because I went through Times Square, and literally the Times Square subway station is just wall to wall Serena for Roe right now. And it's a great coup for Roe, but I would argue that this is a coup for the entire GLP sector and acceptance of it, because you go online, it's a toxic place, but when you see people talking about like Ozempic or Zepbound or any of these drugs online, there's always somebody in the chat who has to be like, move less, move more, eat less, move more.
Right.
You don't need these drugs. And if the most successful female athlete, arguably of all time, could not get to her goal weight and was not moving enough when she was winning Grand Slams, good luck for you to move enough. So I mean, the thing that I think about here is like, she's 31 pounds less than where she was when she was winning the US Open and Wimbledon. I'm like, how many more Grand Slams would she have won if she could have gotten the weight off then, because she was carrying an extra 30. Like So anyway, I think that this goes a long way to normalizing GLP usage. I can't think of a person that could come out and say, hey, I did this, like this is so much more powerful, I think, than some Hollywood star losing 20 pounds. This is a great athlete who had trainers and chefs and whatever and couldn't do it without the drugs. So anyway, I think that is positive for everyone from Lilly and Novo, to Weight Watchers and obviously Roe. So because it just normalizes the whole thing. So
maybe she'll come back and play some tennis again for us.
I wouldn't be shocked if she came back and played doubles, but that's a whole other conversation, right? Yeah. So anyway, so next slide, Jen. That's just sort of an update on WW. I didn't put a slide in on their most recent results, but the most recent results, they basically have a big cost cutting program and they came out ahead on EBITDA. In terms of what we were expecting. They came out a little light on revenue because they've totally cut off any kind of use of compounded drugs, which I think is smart. Get out ahead of it. We have a very aggressive and changing FDA environment. I would not be relying on compoundeds. I think that loopholes.
I think a new batch of warning letters just went out this week, didn't it?
Yeah. So anyway, I'm bullish on the GLP area. I have been for 5 years. I've talked about in the show that I've owned Lilly. I've owned Lilly for 5 years, and I've been selling it down. I'm probably sold half my stock. It's kind of stuck in the 700s now. It's been in a range of 700 to 800 for at least a year now. I was kind of gingerly starting to look at Novo, and it was kind of hard for me to think about Novo because years ago I made a decision that I thought that Lilly's drug was going to be better than Novo, so I owned Lilly and not Novo, and I hadn't really I thought about as Lilly sort of bumped up against full valuation, got to a 30 PE, etc. I thought about selling Lilly. I never thought about buying Novo because Lilly's drug is better on the margin. That said, stock's been cut in half this year. There was an earnings downgrade. The CEO was fired. They screwed up a whole bunch of things, like their shortages on Ozempic was what opened the door to the compounded in the first place. There's a limited number of years to be selling these drugs, and so to be missing 1 year because you just couldn't make enough. Because you introduced it in other countries instead of just focusing on the US. They made mistakes. No joke, they made mistakes. But what do you have left now? You still have a business with an 83% gross margin and a 43% operating margin, growing its top line in the high single digits, trading at 15 PE. You still have a GLP market that has tiny penetration, and you have a whole bunch of new applications, new studies going. GLPs for sleep apnea, GLPs for Alzheimer's, GLPs for kidney stuff. Like there's a whole bunch of studies running right now, some of which, may turn out to be nothing, and some of which, may turn out to be something that grow the TAM for these drugs, which is they're already expected to quadruple over the next 7 or so years. In terms, I was in Europe for 9 days, just got back on Monday. It's interesting culturally. Almost nobody knows anyone on these drugs in Europe because the companies haven't focused on selling them in Europe. They focused on selling them here. You walk around Europe and there are more people than you might think who need these drugs. So, you think about sort of the global runway for them. We tend to think about it, the US market's going first, but there's a long tail for the rest of the countries out there. And sort of just the idea that being number 2 in this market, even if Lilly's going to end up with 45% share, if Novo ends up with 30% share of a market that's going to triple or quadruple, that's supportive of high single digit or better growth for a while. And there's obviously a patent cliff in 32, but there's also more stuff coming. So just sort of on the.
So you think this blind squirrel is going to pick up a few nuts along the way?
What's that? The blind squirrel will pick up a few nuts. You think this
blind squirrel might be able to pick up a few nuts along the way?
Yeah, I do.
So Ben,
I'm going to start
like
nibbling on that.
This sounds like a stock that Ben would start looking at. Have you started looking at this, or have you looked at it and just said no, or what do you think?
I think we talked about it in the. So I don't remember when it was. I think it was the spring. It was definitely the Q2.
Yeah, I remember you guys talking about it at some point, you and David.
Yeah, David had mentioned it, and I was like, yeah, you know what? I like down into the right charts. Like, so I bought it. Most people don't. That's why there's opportunity. And I think I bought it like briefly at like 62 or something like that, and made a little bit of money, but I didn't have like a strong view or anything. And David was kind of wishy-washy on it. And the thing with the down into let me pull the chart up real quick. Hang on, Novo. The thing with the down into the right chart is you need it to be down on the right and just chill out for a little while. And it feels like we're kind of getting there, but you think about the dollar right now. The dollar's been flat all quarter. So if you were short dollar, owning premium on it, some of these guys are just giving up on that. You just need there to be no sellers left, basically. So I don't know, Berna. Do you think?
I don't know. It was down 20% in a day a few weeks ago, right? Down 20% a day feels like a capitulation point. It went sideways for a little while, and then it's kind of run from I think it's like 40. I think 40 was.
Mid 40s to mid 50s,
to mid 50s, I took down my Bloomberg because to not stress my internet connection, but so I can't pull up the chart. But it seems to be bouncing. I can't tell if this is a dead count bounce or if people are starting to do what I'm doing, which is like, oh, I kind of this was not my horse. I haven't been paying attention to this horse because I've been looking at the other horse, but now it's sort of like, well, Lilly's 30 times and this is 15 times. And if you look at, Lilly's looking like it's going to be 50% bigger than the Novo in terms of share, based on what we have right now on the drugs. I mean, I'll be the first to admit I'm a generalist in this area. I can't add value on, one pipeline versus another. We're going to have to go to David on that. But, I'm sort of looking at this from a gazillion feet, 30,000 feet. And this is one of the most important companies in Europe. It is the most important company in Denmark by far. There is the resources of a country behind making sure that the Nesta drug is at least good enough to be a distant number 2. I think they can do it. They were first in this category. I mean, based on all my reading, there's a million people who want to be in this space and have drugs, out there, Amgen, others. But what does seem clear is that it's still, likely to be a 2-horse race for a while.
Yep.
And I think David said that as well. So, but I defer to him on drug discovery.
Well, if you don't
Berna,
own
let
it,
me
this
ask
is
you a
probably a good
question.
place to start, right? And
Yeah,
if you're
that's
going to
what
get
I'm
some
doing. I'm
opportunities to
nibbling
buy
it.
dips along the way, it's not a bad bet, just on multiple expansion alone.
Yeah.
All right. What do you think, Ben?
I know. I was just gonna ask you. I talked to another. So in this Weight Watchers, because I pitched this long, a little higher on the show in July, I believe. And what was the reception, Berna? Because I have other buddies who immediately liked it, and now they're like, "Oh, the stock's going down," and I'm just like, "Look, it's not a real stock. Relax. I'm sorry that I got you in just a little early, but my point was it was going to 60 or more." Um, but what's been the reception on it when you talk to people?
Um, Small cap guys are interested. You know, people who are buying Novo are not so interested. Because you just have to be. People who are sort of interested in going out on the risk spectrum and are used to volatile small caps think that this is interesting. People who are thematic investors are like, oh, I'd rather own Lilly or Novo for this theme,
Right.
or
Yeah.
or maybe even Hims, because it's easier.
Yeah. It doesn't have the overhang, has better liquidity.
Yeah.
Yeah.
So,
I mean,
that was
Novo's been terrible stock for a year, though, right? Like it's down 60%, 70%.
terrible. Yeah.
Yeah.
But which is why, of course, I'm interested in it because, like you, I'm especially on mega large caps. Like I've talked about this before. I tend to barbell my portfolio where I have, sort of larger cap, liquid, very higher quality names, and then I have, lottery tickets, small cap, micro cap. Sort of the companies that are going from the precipice of, going from losing money to making money and really can hit that hockey stick of, the amount of market cap you can tack on from losing 10 million in EBITDA to making 20 million in EBITDA is a ton, right? So Weight Watchers sits very much in that lottery ticket volatile small cap side of my portfolio. And Novo to me is quality on sale. I mean, it is in the doghouse, but I mean, again, I go back to like 80% gross margins, 40% operating margins. The disappointment of only growing your top line 8%, when your competitor's growing 15%. These are high
8% isn't bad
quality.
for a company that big.
Yeah, these are high quality problems, right?
Yeah,
So,
exactly.
so I'm thinking about them for different pieces of my portfolio. Recognizing that, something like Weight Watchers could be down 20% in a day or 3 days for no reason because of this weird shareholder base, lack of coverage, lack of trading. It's just not an efficient market, and you would expect Nova to not be down 20% in a day,
No,
although
no.
it did do that recently, which is part of what it was that day that it was down 20% in a day that got me interested because, when you have a company this large that's down 20% in a day, either
It
something
was
really
already down
low
30.
or it's an opportunity, right? Because people are just
Yeah.
exasperated and just feeling like, ugh, enough. And they kind of just sell out of disgust and
Yep.
frustration.
Get me out. Yep. I want it off my sheet. I don't want to look at it
I want
anymore.
it off my screen. I never want to see it again. We've all been
Exactly.
there.
All right, let's move on. Ben, what else are you looking at this morning? Anything on your radar? Anything on your mind?
Yeah, I think I sent over a chart. I don't know, Jen, did you get that chart? I was just thinking about yeah, there it was. Oh. Yeah, so this is the 3-month implied correlation, and then on the bottom is the SPX drawdown. And those little red circles are like basically when it's getting very, very tight. And what this is kind of measuring, a big popular trade on Wall Street, podcast, Jesus Christ,
Pod shops.
Is dispersion trading, which is selling, options in vol in the index and buying single stock. And I have it on pretty good authority that they're pretty full, and that's what those red circles mean. Usually, the way I like to think about when leverage is peaking is you see credit spreads at the tights. You see volatility at the tights, or implied correlation, which is kind of just another part of the vol structure. And those little red circles usually precede the red drawdowns, if you notice. So
when you say they're pretty full on single stock names.
They are pretty full on the trade. They don't have much more capacity for the trade, basically. Like they're full up, if you will.
Yep.
And as a guy who runs a convexity fund, what you want to look for is the leverage to build up, right? How does a forest fire happen? There's all kinds of brush around, and that's the fuel for the fire, right? So leverage is the same thing, and obviously you got to look for through the tea leaves to see when the leverage is building up. Now, we could be 1 or 2 quarters away, but it's amazing to me that we're back here so quickly after having, not a huge vol event, but a decent vol event in April. And so, credit spreads are near the tights, and implied correlation is 3rd, 4th percentile. Implied vols at the 10th percentile. So it doesn't mean anything imminent. It just means that the initial conditions are set, basically. And so, we'll see. The dollar is kind of breaking out right now. It's up. The DXY, for example, is up from 96.20 to 98.30, and it's just breaking out the chart. The dollar hasn't gone anywhere for a quarter. Credit spreads basically haven't gone anywhere for a quarter. So if you're short those things, all of a sudden it's becoming expensive to your P&L, right? So we could get a period here of a give back where guys give up on those trades. And we have, and rates are coming up. And as you know, rates have been pretty good for the quarter. So sometimes guys get just a little ahead of their skis, and then we'll see. I don't know. The S&P and QQQ are actually down. It's weird to see them down. I'm just saying. September was like green candle only land,
for sure.
No red candles allowed.
Speaking of that, Berna has a pretty robust portfolio. Have you been selling into this strength? How have you been handling this just never-ending rally?
I've been trimming stuff. Yeah, I've been trimming, the great performers, but I was a little early. I was not a little
early trimming. Yeah, I was too.
I was a little early trimming, so I haven't really done much in the last month because I was a little bit earlier in July, and obviously that was any sales were too early. And I was not, I'll be the first to admit I was not a buyer in the sort of the April sell-off. So I have not been swinging my positions. If anything, I've just been sort of swapping out of stuff that I think got fully valued into stuff that has been left behind. Like the WWs, like the Weight Watchers of the world that have been left behind. I haven't, because I had a fair amount of cash built up, and I did not put it to work in the spring. Because I think that, maybe because, in my world, I talked about healthcare stuff today, but so much of my world is consumer. I still don't think we're out of I know Jeff is a little bit more sanguine about it. I'm not sure that we're out of the water on consumer. I truly believe that the top 10 or 20% of households are holding up the whole economy, and everybody else is under a lot of stress. And, you see, even some cracks, or trade down among those higher income households. And so, and I don't think the full brunt of the tariffs have really hit people's weekly budgets yet, because they're just kind of starting to hit now. I hear from companies that second rounds of price increases are coming now, kind of rolling in September, October.
Second rounds of price increases and package shrinkage.
I mean, you just see, price increases, a lot of footwear companies took, 5 or 10%, and they're going to take another 5 or 10% now. So that kind of thing.
But into a weakening demand environment. So you think about there's an elasticity. And this is what I've talked about on the chat and stuff, is that, tariffs are ultimately deflationary. And so you have a very inelastic for gas, for example, but for Crocs or you name the product. I don't want to get into there's just less demand, and so you have the elasticity on these things hits. And by the way, the reciprocal tariffs just went into effect on August 7th. And then, I track the data kind of weekly, but there's a daily tracker at the University of Pennsylvania. And I just looked, and corporate profits are down 40 billion year over year right now, like for income taxes. So corporate taxes paid, I should say. And, we just got the quarterly payments. And now there could be some from the big, beautiful bill like tax, but there's not that much. So you have to wonder if this is starting to impact bottom lines. And I just think the tariff thing is going to continue to be a big drag. It's running like 370 billion right now. I mean, it's 1.3% of GDP. It's just a lot of money. I think
the big surprise has been how much has been taken by corporations as opposed to individuals. The sharing has been the sort of proportion of sharing has been a little different than maybe some of us might have expected. But that's
what I said would happen the whole time.
What's that?
I've said that's exactly what was going to happen the entire time.
You did expect that. But I mean, I think that if we talked about this in terms of a household tax increase instead of tariffs, everybody, it's just the semantics around this have blunted how people think about what the impacts are going to be down the line. So if everyone had just had, if there was an across the board federal income tax increase, there would be a lot more caution than we saw this summer. But essentially, this is the same thing.
Right. This is a consumption tax.
Yeah. But no, it's just a tax. It doesn't have to be a consumption tax. It can be a tax on corporations as well. I mean, like I said, actual receipts of income taxes are down, which tells me profits.
You're saying it's not a consumption tax if the corporations are eating the tax.
So there's three people that can eat the tax, right? There's the foreigners, either through direct subsidies from like say in China, right? You have a BYD, for example. China's like, hey, we want to subsidize these guys. Okay, you could do that. They give them actual money to keep going and keep people jobs. You could lower your FX, or you can have the importers, the corporations eat it, or the distributors or whatever. Or you can do a Berna saying and say, hey, we're pushing this on to the consumer. Those are your three levers, right? But someone has to pay the tax ultimately. That 370 billion, which is not a small amount of money, is sucking out liquidity from the system. And so let me talk about that for a second. One of the things not talked about with this tariffs thing was in the run-up to the tariffs, you had a huge inventory buildup, which was a boom for the economy perversely. So that was one of the things that helped the economy. And then it also helped the financial markets because it was a big fire hose of dollars out into the global system, right? So in a global world with dollar-denominated debt, and everyone else doesn't have enough of it, if you think about Triffin's dilemma, for example, that was something that eased the financial conditions. Now we're having the other side of that, and so if you have the current account deficit decline, which it hasn't really yet, but if it does, then that's the current account negative current account equals capital account means there's less capital coming back in. And eventually it'll find its way to the financial markets as well. So there's nothing to be bullish about tariffs. It's just a knife fight out there is the best way to think about it.
All right. Well, on that happy note, Berna's got to get out of here. She got all dolled up for another meeting, not us. So we're going to let her go. Thanks for joining us, everybody. Follow us on wallstreetbeats.com and at passes.com/wallstreetbeats. And we'll see you tomorrow. Thanks, everybody.
All right, guys.
Thank you, Berna. Thank you, Ben.
Thanks. Have a great day.
You too.
Thanks, Berna.
Thank you.